I wanted to spend a few moments this morning just to review some of the common terminology that we use in group health insurance in hopes that if you understand what these terms mean, then you'll better understand your health insurance policy. So the carriers basically build into their health insurance programs 3 different cost shares, and those consist of copays, deductible, and coinsurance. So what I'm going to do is take a few moments to explain each one of those specifically. So the first cost share is a copay, and that's what you pay when you go in to see a doctor. Typically, your copay for an office visit will be lower with your primary care doctor than with a specialist. So that is your copay. You also may have a copay for your prescription plan. You would pay a flat dollar amount, whether it be $20 or $30 for a medication. And usually if the medication falls into a higher tier, such as a brand or a preferred medication, that copay is going to be higher as opposed to getting a generic medication. So the second cost share that's built into a health plan is the deductible. And typically the deductible will come into play when the member or the patient incurs more expensive type services, such as an inpatient admission, outpatient services at the hospital, advanced radiology, such as a PET scan, CAT scan, or MRI. And the deductible can range anywhere from about $500 to up to $6,000 plus. So depending on the plan that you choose, that can be a significant expenditure. The third cost share built into a health plan is the coinsurance. Coinsurance is the percentage that the carrier pays towards the claim after the deductible has been satisfied. That can range anywhere from 60 to 100%. The other term that you'll hear a lot about in your health insurance plan is the maximum out-of-pocket, or MOOP, M-O-O-P. That is the combination of anything that you pay out of pocket during the calendar year: copays, deductible, coinsurance. So that a combination of all of those, they'll total them all up, and when you get to your maximum out of pocket, you don't pay any more. The plan will cover everything at 100% thereafter. The actual cost of insurance, the amount that you pay per month for the coverage, is called the premium. And the premium is directly related to how much you're going to pay out of pocket for the services that you rendered during the calendar year. So if you have a plan and your premium is very high, the likelihood is that you have a low deductible, low coinsurance, and low copays. Alternatively, if you have a plan that has a lower premium, then you're going to see higher deductibles, higher coinsurance, and ultimately a higher maximum out of pocket that you will be responsible for if you render those services during the calendar year. So just to recap, there are basically 3 cost shares that are built into a health plan. You have your copays, your deductible, and your coinsurance. Those collectively count towards your maximum out of pocket. That's the maximum amount that you'll be responsible for during the calendar year. And then the actual cost of the insurance, the amount that you pay for the coverage each month to the carrier, is called the premium. Thanks so much for tuning in again. And if you have any questions whatsoever, please feel free to give me a call. Thank you.